So you have some money and are ready to start investing. And suddenly everything seems overwhelming. You have like a million questions in your mind, like, is investing risky? How much should I invest? Where should I invest? And how do I start? So don't worry. In this video, I'll take you through step by step on how to do this. The very first important question is, are you really ready to start investing? Ask yourself, do you need the money in the short term? Maybe like 1 to 3 years. Maybe you have plans to buy a new car or you have plans to renovate the house. If you have short-term use for your money, please do not invest that money. And if you have a high interest debts that you are still servicing, it is a bad idea to invest with that money that you can repay. However, if you have a longer term investment horizon, maybe 7 to 10 years, then you should really consider investing the money. How much should you invest? For your investment to be life-changing, the amount invested has to be significant. Example, if you invest $1,000, if there is a 10% gain, it is only $100. It probably gives you some pocket money, but nothing that can truly change your life. However, if you put in $100,000, if there is a 10% gain, it is $10,000. Still not life-changing yet, but it is significant. Imagine if this amount keeps compounding. Your $100,000 becomes $110,000, and then it becomes $121,000, and it continues to grow bigger and bigger. Ultimately, it becomes life-changing. But as a beginner, I don't think you should go all in without getting a feel of how it is like to invest. One of my girlfriends started investing with so much enthusiasm, but when the market goes volatile, she really couldn't handle it, and she sold everything at a huge loss. So please test it out first and have a feel of how things are. The market is always going to be around, so you do not have to be impatient and jump all in. For a start, just put in $100 to $200 or maybe $2,000. Don't go crazy, no. Especially when you are starting out, start with an amount that you are comfortable with, and even if you lose, you don't feel so much pain. Step 3, where should you invest? With this small starting capital, where can you invest? The stock market could be the best option for you to start. It does not require a huge amount of money to begin with. The good thing about the stock market is that it is very flexible and liquid. You can invest or withdraw pretty easily. Also, it does not require a huge amount to begin with, unlike real estate. Step 4. Which brokerage should you deposit your money? So now we come to the part where you need to create an account to deposit the money you wish to invest. There are so many brokerage companies out there. Which one should you choose? The brokerage you choose really isn't something that you should be pulling your hair out or overthinking. As a beginner, you should only consider a few things. Number 1, choose one that is easy to transfer money in and out from where you are staying. 2, choose one that allows you to deposit the amount you wish to invest, as some of them have a minimum amount of deposit you require. Number 3, choose a more well-known and popular brokers in your country, as you want a reliable broker who will ensure your money is safe. And 4, choose one that allows fractional shares. Means you can buy in a share even with a small amount of money instead of buying one full share price. Number 5, choose one that allows auto investing. Don't overanalyze about the fees or commissions as a beginner when you are not investing a significant amount of money yet. Some brokers which you may consider are Webull, Moomoo, Charles Schwab, or even interactive brokers. Of course, once you really start to get serious with the investing and would like to put in more money, then I highly recommend you diversify across different brokers instead. Step 5. Which stock ticker should you invest in? You may hear some people talking about investing in tech stocks, IPO stocks, and earning a lot of money. However, they can earn you more, but they can also drop significantly. So instead of chasing after the popular, hottest stock, the last thing you want to do is to catch the stock at a bad time and realize that your investment has dropped by 40%. Past performances are not an indicator of the stock's future performance. If there are any fundamental changes in the business or bad news, you have to be prepared for some heart attack. So how? Simply go for S&P 500 ETFs, as it diversifies your risk since it gives you exposure to 500 of the largest US companies. You may have heard of index funds. Effectively, it is like a basket of companies you are investing in. This reduces your risk through diversification across the different companies instead of just investing in one stock. Investing in one stock, there's a chance it can go bankrupt and you lose all your money. But investing in a basket of companies, unlikely. What are some of the index funds you should invest in? It can be SPY and some others. Instead of just cherry picking one individual stock and praying it will go 10x, just get a feel of how it is like to invest and how it feels when you see your portfolio become red before you decide to go further. Step 6. What kind of investment strategies should you follow? Once you start buying in your first investment, give yourself 1 to 2 months to experience the daily fluctuations of the market. Understand that this is what you're going to go through and imagine multiplying that 5 to 10 times. How do you feel? Once you can stomach the level of volatility, then you should take yourself to the next level and invest more. Even if you find that you're unable to handle the ups and downs, I would still recommend you slowly add into your investments via dollar cost averaging. That means you invest regularly, either daily or monthly. Some people go for technical analysis, where you learn how to read the charts, and some people use fundamental analysis to determine whether they should enter the market. But with dollar cost averaging, you don't need to learn this in order to start investing. You just simply invest regularly and make sure that you're always in the market. Step 7. Why must you continue to invest even if it gets uncomfortable for you? While you may be able to save so much, you're just not making your money work harder for you. Inflation is real, and they erode your savings. Prices are simply going to go up. And if you're not putting your money to potential growth, you're shrinking the worth of your money. And don't underestimate the power of compounding. It can truly change your life. Hope this video helped you. And if you want to take your investing up another level, follow me for more.